What's up, everybody? This is Jimmy with Trading Decoded. It is January 16th, 2024, and I am sick as a dog. So this is going to be a quick, short video, and the basis that which it's going to be based on is the fact that if you were patient today and you waited for the proper setup, you could have made money in both directions. Aggressive traders made money today too, and truthfully, support and resistance is king. Always has been, always will be, and if you can learn to trade it, you can make good money. Okay. With that said, let's go ahead and launch the chart. Take a look at some of our levels and what we were waiting for to happen. So as you could see, just like always, I got my 3 targets high, 3 targets low, pre-market range. Friday's high, Friday's low was here. Sorry, Friday's high was up there. And yeah, we just needed price action to do price action-y things. So call put scenario. Jimmy, where would you buy calls? Where would you buy puts? It's very simple. If we can get a close above this line up here, 475.59, I'd be interested in calls to at least 475.84. That's all. Why? Because I want a candle close above that line because we have no price action on the day north of that white line. So I want to prove that the resistance that existed there before and kind of here in the pre-market is no longer resistance. That's it. There is no other magic serum behind that. If you know where these lines exist and you know that we've gotten through the resistance of the current day, naturally one would expect or think that maybe the next target is the next resistance up from the most recent day prior to today. That's where that line comes from. That's where the target comes from. Likewise, to the downside, we have the pleasure of knowing that the last time we pulled back and got below this blue line that we stopped moving lower at this line right here at 474.42. Every time we've made it below that line, where did we go next? 474.09? How do we know that? Well, I don't know. I'm just looking at the one time that we got below it, which was here. We made it to here. I'm not really looking for anything magical. Okay. I'm just expecting what happened the last time we had a certain event take place, the same result the next time that event takes place. So my put line is a breach of 474.42. Why a breach and not a candle close? Because we have proven price action below this line. We didn't have proven price action above that line. Okay. There's nothing proven to happen above that line on the day. So I want to make sure with the candle close that we've taken out that level of resistance and that we're clear to move up from there. So all we had to do was be patient. If you play anything similar to me, right? Some people got in way before this. Some people bought the double top here because here it worked well also. And that's totally fine. Okay. For me, I'm waiting for a very specific set of things to take place before I deploy my money in the market. The first of the 2 things that I'd be willing to deploy my money in the market came here. Okay. So the beauty of this, though, was not only did we have a breach of our line, but we also had a trend moving in the same direction that I wanted to go. All right. So you enter this trade and you either get out at the next one down, a 40-cent move, or you can hang on to it if you so choose because the market said it was worth trying and make it down to the next line. That's up to you. It's not my decision to when you enter and exit your trades. All I am doing on these videos, all I'm doing live on the microphone all day is explaining to people what I think is going to happen and why. That's it. I don't tell you when to buy and when to sell. You take the information that I share with you, you look at how often it's accurate, and you make a decision for your own money using your own brain to take your own trades. Okay? I can only tell you what I would do if certain events took place and what I wouldn't do because certain events haven't taken place. Nothing in between. I will explain until I'm blue in the face why I like support and resistance. I'll explain to you how I use it all day long, any day, every day. What I won't do is say, you should buy puts here because of this reason. I'm not allowed to do that legally, and I don't feel comfortable doing it. What I will tell you, though, is that, hey, I do expect SPY to get, if we get through this level of support, I expect it to get to this level here. Use that information how you see fit. Don't use that information at all. In fact, just listen. You can listen for a week, a month, and you find out if what I am explaining to people is true enough or accurate enough to be used to make money. That's where we'll leave that, okay? So we were trending down. We broke our put line. You enter the trade if you believe that's a good thing to do, and you make money if you did believe it was a good thing to do. That was depending on who you were, some people who got in here and out here made 30+%. Some people who made it down to this purple line made more than that. But for those of you who got out anywhere near this line, well, that was close to a 50% trade for you. Congratulations. Usually it could be a one and done depending on your position size or your ability to just say, man, I just made a 50% trade in, I don't know, 1, 2, 3, 4, 5, 6, 7 minutes. That's a good day's work. That's an easy day's work, okay? But then we find support down here. Now, this line didn't exist until we made this support, and we broke the downtrend. What happens when we break the downtrend? Does that mean we should buy calls right away? No, it doesn't. It just means that puts should be on alert, so be aware of that, right? Now, what are we looking for once we put in this higher low, which we called out as soon as it happened? Guys, if you're still holding onto your puts, this is a higher low. You might want to consider taking profits. Now, I don't know what's going to happen after that. It could very well continue down from there. I don't know. But what I am going to make you aware of is that this is usually not a good sign for puts. And so if you miss it, I'll be there to remind you of it. Okay. In this particular case, it was not a good sign for puts. We got up to and broke through with a candle close above, excuse me, our resistance level. Well, historically speaking, when we break through a resistance, we tend to move up to the next resistance above. In this case, it is this double top high or lower high that we made right here. Would you not agree that we closed above this here, stayed above it, turned it into support, and ran right up to that same resistance level here, at least with this wick, only to eventually get through it, making it to the next one? Okay, we closed above that support, and we ran to the next support, or resistance rather, which wasn't very high, but not all things last forever. We ended up ultimately not making it to the next resistance above, pulling back, but still maintained this upward trend line, okay? Now, for me, calls were not a thing unless we can get a close above 475.59. That was talked about 5 minutes before the market opened, just like we do every other day. So yes, all of this move here, I didn't get to take advantage of. Some people did, some people didn't. Some people waited for the call scenario. Some people had already left for the day because they made 50% on the put scenario. I don't know. You guys have to determine when you want to walk away. I can tell you this for a fact, that the more trades you take, the more your win rate percentage will suffer. We'll leave it at that too. That said, we closed above that line for the first time all day. And what happens when we do? Well, we enter our calls if you so choose, and we expect the move to get to the next line. Sometimes more, sometimes not so much more. Sometimes way more, sometimes not at all. You just got to be prepared. This trade should have never snuck up on you. If you're looking to play calls and you wanted to wait until that line there, you should have been prepared for that trade 25 minutes in advance. Okay? No trade should ever sneak up on you. If it does, it's a FOMO trade. You'd be hard pressed to argue that. If you didn't know you wanted to play calls at a specific level, yet you just executed right here, that was a FOMO trade. There's nothing on this chart that you could have seen differently at this point than what you needed to see at this point. We had developed an upward trend. We had a trend line. Calls and puts should be known in advance without the chart ahead of you being known. You should be able to say to yourself, all right, in order for us to get into this level, because this is what I explained to everybody who didn't know, we have a lot of new people in our community. Do you know what we would have proven? What would be required to get up to this place from this place in the first place? right? And maybe I'm crazy. Maybe this just comes natural to me as far as the way I interpret the chart or the way I see it. But I try and look at it logically. And I know that the stock market's not a logical place, right? It's a very illogical place. But hear me out here. In order for us to move down, and we put all these lower highs in to do so, right? A downtrend's lower high, lower low. The lower highs are made from buyers buying up and then the sellers stepping in and preventing it from reversing, right? That's what creates a lower high. Sellers push us down to here, buyers step up and say, okay, this looks like a great price to buy. So they buy here. They push it up, hoping obviously to push it up higher, but the sellers say, nah, we don't want it to go higher. This, we're gonna stop that. And they create sales here at this lower high. Then the sellers get stronger and push us lower, making a lower low, right? Where buyers try to stop it. So buyers are here, buyers are here, buyers are here, and buyers are here. But sellers are stronger, which is why we're moving down. In every lower high that we make on the way down is another batch of sellers that had to come in to prevent the move from reversing. Don't complicate it. Now, in order for us to move up to our call line, what will we have effectively had to do and did do in order for this to be worthy of your money for calls? I don't know how you see it, but I know how I see it. I'd say, well, for each one of these batches of sellers that we had to get through to even make it up to this point, we had to turn them into buyers. All we're doing is adding momentum to a move that started out slow and then it started to gain momentum. I'm just taking advantage of the momentum and the fact that we've squeezed out every short of the day by this point. Right? Might not be true completely to the sense. I don't know, right? I'm sure there's still people holding shorts at this point, but anybody who's trading with any kind of a stop loss or logic or any kind of thing like that, technical, if you were short the market here, by the time we close above this level, I'm sure you've either gotten out in profit or you stopped out with a loss at this point. Right? In order for any short to get out of the market, they've got to buy to close. Buying is what causes the market to go up. Selling is what causes the market to go down. I'm just taking advantage of the fact that we have squeezed all the shorts out at this point for the time being and taking a small piece of the predictable piece of the pie. I mean, that's it. Those were my two trades for today. They paid very, very well. Okay. And all I had to do was be patient enough to wait for those reasonings to be there and then execute when they happened, if they happened. If they didn't happen, I took no trade. It's cut and dry, right? And you can see the method that I use works day in and day out. And I'm not just talking the call put scenario. I'm just talking about support and resistance, guys. If you waited for a trend to develop, down or up, it doesn't matter. How many times did we break through a support level and make it down to the next support level in a downtrend? And how many times did we break through resistance after confirming an uptrend and make it to the next resistance? Way more than times it didn't happen. So the point is, probabilities say that in an uptrend, if we break resistance, we're going to head up to the next resistance. It's not a guarantee. No trade is ever a guarantee. It's not 100% chance that it's going to work out, but more often than not, it does. So the beauty is, if you know where those levels are, then you know where your trade entries and exits should be. The one thing that muddies up that thought process is what you want. There's a difference between taking what you want and getting what the market's willing to give. They're two completely different scenarios and two completely different numbers, right? We all want to be millionaires. And you will hold your trades to become that millionaire, even though the chart's telling you, yeah, it's not happening today, Jack. And what happens is we become vulnerable because when we don't get what we want, we will hold until we get what we want. And very often that hold becomes the problem, right? It becomes you having to settle for less, or in many cases, settle for a lot less. Right? Meaning you're not possibly going to fathom taking less profit because it didn't reach where you wanted it to go. And instead, you will take less than less profit, which is no profit and even taking away from your previous profits, meaning you take a red trade because you put yourself in a situation to not be willing to accept less than what you wanted in the first place. It's dangerous. It's a really, really scary place to be, and it's a common thing, guys. So I'm not saying that you're weird for having that issue or dealing with that situation. That's a common thing. That's why most people fail in this business, right? So my question to you is, if you have clean, clear reasons for entries and exits, yes, the moves aren't huge, but hear me out, if you could stack a bunch of them in succession to prove to yourself that your confidence can be there and the likelihood of a trade that you are interested in taking is likely to work out more so than not work out, wouldn't the only thing left be a scaling factor? Right? If you have come to realize that more often than not, when you break a resistance level and it's an uptrend and we're going to make it to the next resistance level, okay? If that level is far enough away to justify a trade, and you are at a point where you want to dictate how much money per day you want to make, isn't it come down to a math situation? Okay. If I need to make $100 a day, I know that an at the money SPX contract needs about a 20-cent move in SPY to generate $100. Okay? That's the math under normal circumstances. Okay, at the end of the day, that changes because of theta and volatilities and all kinds of other things, right? But in the day and during the day when I trade in the morning, a 20-cent move on average pays $100 per contract on SPX. That's about an 8 to 10% return. Okay? Well, if I want to make $500 a day in that same 20-cent move, then I play 5 contracts. That turns my $100 trade into a $500 trade. Right? I'm not trying to hold on to my trades longer to make more money. I'm scaling up my position size because I'm confident in the move happening versus trying to hold a smaller position longer, which I feel less comfortable doing because I don't feel like the moves last forever. And in this market, you get crazy things happening out of nowhere. I don't want to hold through the crazy things, right? I'm more interested in spending less time in the market to make the money that I need to make for the day. There's 2 trains of thought here. Play smaller positions and hold them longer or take more trades with smaller positions. That's fine. But if you're the guy like me who believes that spending more time in the market is adding to your risk, whereas, we can go round and round in that circle, right? It's a situation where I look at time as being a larger risk factor than my position size. I'll put up more money up front so that I could spend less time in the market, whereas some people would put less money up front so that they could spend more time in the market. It's not a right or wrong thing, guys. It's how you feel. It's how you trade. It's how you see the market. If you've got very, very strong rules that you adhere to that allow you to stay in your trades longer, whether you're swing trading or trading crossovers or whatever it is, then play what is best for you and your strategy. Mine is different. And there's a lot of people out there who enjoy my style of trading. There's a lot of people out there who hate my style of trading. There are people out there who say there's no way to make money. You can't do what I do consistently. I'm here to tell you that that's just a false statement. It may not be consistent for you, and that's fine. But I've got hundreds of people in my community that are doing it consistently. And so it works. Like, I'm not using my own personal trades as a basis for that statement. I'm look at the people in our community that are doing it, that have nothing to gain by telling you that they're doing it. Right? Guys, I'm not here to convince you how to trade. I'm here to show you what works for me and what works for other people. It doesn't work for everybody. Okay, so just take the information that I'm giving you on price action and focus on seeing if that works or if it's any benefit to your current trading style that might help you be a better trader for your trades. That's all. I'm not selling you me or my trades. I'm showing you what I know to be statistically proven to work out more often than not. That's it. Okay, I'm not reinventing the wheel. I am trading or sharing my knowledge on support and resistance, and I'm applying it to my trades on a daily basis. That's it. So we get through. Now we get to the spot where we can't quite make it to our next target high. Nothing wrong with that, right? We broke through a resistance. It moved up, started to struggle to move higher. But what I'd be willing to bet is somewhere around here, Qs were up against a line that may have been a resistance. Now, this is something we cannot ever forget. So at 1042, okay, Qs had still more room to go to the upside. So what we were expecting SPY to push up higher because Qs hadn't yet made it to their resistance, and it just didn't. But the Qs did hold, so we did have some people that probably held onto their trades a little bit longer. But then we had a Fed speaker. We had a Fed speaker at 11 o'clock. Good old, I think it was Waller. Typically a hawkish kind of guy. Came out kind of dovish today. The market reacts irrationally anytime a Fed speaker is speaking. Okay, so this is algorithms. There's nothing that he said that was a shock to the market. Nothing. Yet here we have this crazy candle. This is why you don't want to hold through the reports and hold through speakers, guys. You never know. This could have very well been a green candle. Right? It wasn't. It was a red one. So if you were holding on to calls, we warn you every time. Guys, 10 o'clock's coming upon us. Be careful. If you're in a trade, you might want to take your profits. If you're in a losing trade, you might want to cut your losses early because we really don't know what's going to happen. But something is going to happen at 10 o'clock. Just like something happens when reports drop or Fed speakers come on. It's not every time, but it's usually. And the problem is we don't know what's going to happen. So protect yourself before a bad problem gets worse or a good problem turns bad. Okay. If you're in a profitable trade, when one of these reports or speakers are coming up, it's going to be wiser to take your profits that you already have because you just don't know what's going to happen at that point. We pull back. We end up finding a pretty good support on Friday's low of day, high of day, low of day. Sorry. We bounce off of it, trying once again to make it back through these resistance lines, trying to get to this next line up, which we never got for the day, but instead we ran into a resistance that we knew existed because it proved to us before that it existed. Okay. And then down we come, putting in lower highs, lower lows. Now, at this time, we have a big red box on here that I said, man, there's a zone that I wouldn't take any trades in. And it pretty much exists between 474.91 and this 476.50 line, I think. We had a big red box there. I said I wouldn't take any trades in that zone. We've created too many levels of support resistance that it's just not attractive to me. And right before I left for lunch, I said I personally wouldn't take any trades unless we can get below 474.91. Actually, it might have even been this candle down here. Yeah, it was this blue candle down here, 474.48, because I didn't leave for lunch until 12:22. And I said, guys, I'm not going to be here to tell you this, but I wouldn't touch anything unless we can get below 474.48. And if we did, I would just be looking for the move to go to 474.09. That's it. So very much like our put scenario. We got that candle close. I wasn't here to walk people through it, but I said it before I left. We closed below it. We made it down to the next line. But Jimmy, why not just hold it? Because I don't hold through support lines. Well, it's really that's really all there is to it. And we pulled back. We broke the downtrend line, but couldn't put in another higher high, in relation to this. So we're still trending down. And then we break through the next level of support, right? This yellow line, we get our first candle close, make it down to the next line, right? First candle to close below that line gave us the right to get to the next support in a downtrend. Okay. We don't close below this line. We don't get below it. fact, we move up, we put in higher lows, higher highs, and we start to make this move to the upside. But when we do break this with a candle close, we make it to the purple line. Okay, we close below the purple line, and at this point, we're hoping to make it down to our next line. We didn't, but that was still a nice move for anybody who took it. I did not. I was done for the day long before this. Quite frankly, I was spending a lot of time helping other people understand where the call put scenarios come from and all kinds of other things today. Price action in general. Today was just a clinic on all things. We did a chart replay during the day while things were a little slow, trying to explain things to people that haven't quite wrapped their head around or understand everything that I'm trying to do here. And this video has turned into a much longer one than I expected it to be. And for that, I apologize. But guys, I feel like crap. And when I get on these talks, it just starts hitting me that I know where the struggles come from for most of you, because we've all had to deal with them. And it's the people who have learned how to deal with those struggles, whether it's avoiding them altogether or changing what needs to be changed so that the struggles are no longer struggles. We all have to go through that to become successful traders in the first place, right? So I'm just telling you that I understand what makes this so difficult. I have not forgotten it, and it doesn't become less difficult. The feeling that is involved in trading never goes away. You just get better at managing those feelings the longer you do this, right? And when you can manage your feelings, then you can take cleaner trades. You can feel more comfortable in the trades that you do take, and then things get better. Okay, it's not easier. You just execute without feelings being involved the longer you do it. So with that said, guys, support and resistance plays a key role in everything that I do, everything that I say, everything that I teach. In fact, everything that I see the market, the lens that I see the entire market through, is strictly based on support and resistance. All of it. No indicators, no special lines of no special indicators, no this, no that. It's literally price action in lines. That's it. Okay. And if you're interested in that type of learning, please just take advantage of the 7 days that we give you for free. You don't have to be a paying member. You just jump in there, give us a shot, right? Give it a shot. Even if you trade a completely different style, I think that I'll be able to teach you something that could be useful to you that will help you become a better trader. That's my goal. It's not to change what you do. It's to enhance what you do. All right. And if you don't have a winning trading strategy now, I'm confident that something in our group can help you develop a winning strategy, right? We've got multiple different types of traders in our community, right? But the common understanding is that if you can have a good idea of which way SPY is going to go and where that direction may stop or change, I don't know how that's not helpful information, right? With that said, hope you found some good information in this video. If you did, please like, share, and subscribe. I'd appreciate it. If you'd like to join our Discord community, there's a link down below. We'd love to have you. Take advantage of the free week. If you like what you get for that free week, consider becoming a paying member. We have multiple options there. You could do monthly, you could do yearly. Either way, I'd love to have you. I'd love the opportunity to help you become a better trader. Also, check out our YouTube. Check out our website. You don't have to do that. There's nothing there to look at anymore. It's www.trading-decoded.com. We have some merch there, and you can put a face to me, but you don't have to if you're watching this video. Here I am, but one of our other moderators are in there as well. You can check us out, read our bios, whatnot. And that's pretty much it, guys. I'm going to wrap this up. Thank you for sticking through if you did all the way to this point. And for those of you, tomorrow's probably going to be a hectic pre-market. We got a lot of reports coming out tomorrow, a lot of Fed speakers as well. So be on your toes, be careful, assume nothing, and hope you all had a fantastic day. As far as our community goes, right now we have like an 8-to-1 red to green ratio, which is a fantastic day. I love that. So congrats to everybody in our community that hit the green book today. Love you guys. Till tomorrow.